Hello there, world. Welcome back to my channel. If you're new here, I'm Joe, a licensed, certified public accountant with over 10 years' experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes, and I'm all about helping you take control of your life, take control of your money, and living smarter. Today, we're talking about something that sounds complicated, but is actually super helpful once you get the hang of it: the balance sheet. If you run a business or you just want to understand your finances better, knowing what a balance sheet is can really help. I'll explain it in plain English, so don't worry if you're not an accountant or financial expert. Be sure to subscribe to our YouTube channel and check out our blog site where we post every Monday, Wednesday, and Friday. Officially entered the fourth quarter for all those December 31st year end businesses as of October 1st. So, since we're in the fourth quarter, we're coming into a critical point for tax season and year end filings and maybe even an audit. So, over the next couple weeks, we'll be breaking down the financial statements to have you prepared for tax season and for an audit. The first lineup for this over the next couple weeks will be the balance sheet. Now, this will be the first thing we'll go over for all those business owners. So, what is the balance sheet? Simply put, it's a financial snapshot of your business at a specific point in time. It shows what you owe, what you own, and what's left over, which is called your equity. Think of it like a photo of your money, situations on a particular day. A balance sheet has three main parts, and each one tells a different part of the story. The assets, if we take a look at the XYZ company, shows what your business owns. So they have cash, they have accounts receivable, deposits, and inventory. And then they also have property, plant, and equipment. And they don't have any investments for 2002, but they had investments in the prior year in 2001. And then we have our liabilities. This is what your business owes. So for liabilities of the XYZ company, they have bank overdrafts, some sort of bank loan, accounts payable and accrued liabilities, long term debt, the current portion of it, income taxes payable, dues to shareholders, and their long term debt. Now, just to explain the difference between long-term debt current portion and long-term debt overall. Long-term debt current portion is what is due right now. The long-term debt is what is due over time. So think of it as your current portion, think of it as your minimum payment like on a credit card. And then the long-term debt is what's overall outstanding and what is owed uh, on that credit card. And then next we have our shareholders' equity. This is the value left over after you pay your debts. So it looks like their stated capital is 1 and their retained earnings is 17,000. Let's break this down a little further. Let's look at the assets first. Assets are things that have value and belong to your business. This includes things like cash in the bank, which is our first line item here on our made up uh, balance sheet. We have cash of 11,000, equipment or tools, which they don't seem to have any. Inventory, if you sell a product, their inventory here is 159,000. Accounts receivable, which is money owed from customers to you, looks like they have $42,000 outstanding that is owed to them from customers. And then properties or vehicle, which is going to fall in our property, plant, and equipment. Looks like they have $59,000 worth of property, plant, and equipment. Basically, assets are what you can use or convert into cash. Next up is our liabilities. These are the debt or obligations, money your business needs to pay to others. Some examples include loans or credit card balances, which on this one they have the bank loan here, which looks like there's nothing in this year, but prior year they had 60,000. Bills you haven't paid yet, like utility or rent, which is usually our accounts payable and accrued liabilities. So it looks like they have $82,000 worth of accounts payable. We have taxes owed, which looks like there's none, or there is some. We have our income taxes payable, which is at 14,000, and then we have money owed to suppliers, which also falls into this accounts payable of 82,000. It also includes things such as the current portion, like we said earlier, of our long-term debt of 25,000. And then we have amounts due to shareholders of 51,000, and our long-term debt, which is the overall balance left on those usually loans or some kind of debt payment of 86,000. Think of liabilities as your business bills or debts. Lastly, we have our equity section or shareholders equity. This is the part that belongs to you as a business owner after all debts are paid. In simple terms, it's assets minus our liabilities. Equity is your business's net worth. If you sold everything and paid off all your debt, equity is what you would have less. So, why does the balance sheet matter? It matters because it helps you to understand your financial health at a glance, make better business decisions, shows lenders or investors your business's value, and tracks how much your business is growing over time. It's a powerful tool for managing money, even if you're not a numbers person. So let's do a quick recap. A balance sheet is a snapshot of your business finances on a certain day. It shows what you own, what you owe, and what's left over. It lists your assets, what you own, liabilities, what you owe, and equity, what is left over. Assets are what you can use to convert into cash. Liabilities, think of your business as your business bills or debts. If you sold everything and paid off all debt, equity is what you have left in your business. It helps you to understand the financial health of your business. It's a powerful tool for managing money, even if you're not a numbers person. If you want to get started, try listing your assets and liabilities today. You might be surprised at what you find. Thanks for watching. If you found this video helpful, please hit the like button. Got questions about the balance sheet or business finances? Drop them in the comments below. I'm here to help. I'll talk to you guys next week as we continue our series on financials for businesses during this fourth quarter going into tax season. And we'll talk about how to reconcile bank statements. Don't forget to subscribe to our YouTube channel for more videos. And check out our blog site where we post every Monday, Wednesday, and Friday.